Hi, my name's Siobhan, and I'm head of mortgages here at Pepper Money. I'm really looking forward to taking you through our super smart SMSF. Today, we're going to talk about the Pepper world. Where does Pepper Money sit in the Australian lending landscape? We're then going to address the boom that is SMSF and how you can capitalize on this great opportunity for your customers. We're going to take a closer look at how SMSF lending works, including our super smart product features and a bit of a deep dive into our serviceability calculator. And last but not least, we'll cover some of those digital tools that make SMSF lending super easy for you and your client. Let's start with the Pepper Money world. Well, in Australia, we have banks and we have non-banks. Typically, banks cover those prime style, clean credit customers with high credit scores and relatively standard income. So, where do non banks like Pepper fit in? Well, we do still look after bank prime customers too, but we have some things that are a little bit outside of the box that might make it that little bit easier for some Aussies. This includes fast SLAs, no credit scoring, the way we look at serviceability, and our common sense approach to non standard incomes. This might include full doc or alternative documentation verification, and we can also look at things like 40-year loan terms, which can be a real lifesaver for those that need that little bit extra borrowing capacity. And last but not least, you probably already know that we've always catered to those customers that have life events with a common sense approach to risk. Customers sometimes go through things like divorce, illness, loss of job, but we at Pepper are here to help them get back on track. At Pepper, we've always been known for those outside of the box solutions, and we've made sure that we close the gaps in customer opportunity left open by mainstream banks in that residential lending space for over 25 years. We continue to enhance our policy and product offering, and we can't wait to share some of the most recent enhancements with you today. Now, whilst you might be familiar with our residential offering, we've been expanding what we do and what we're known for now for quite a few years. In 2019, we launched into the commercial space, and at that time, we really led market change, being one of the first to offer offset accounts and 30-year loan terms in that commercial segment. Today, we're known for the breadth of asset options we'll consider across both prime and near prime options. The process is quite similar to the residential loan process. It feels just like a home loan, but with a commercial security, making it super easy for brokers looking to expand into the commercial space for the very first time. Now, not too long ago, we launched a bit of a pilot program into SMSF. And true to Pepper Money style, we kicked it off with a bang, challenging the market with a full suite of product features and reducing some of those entry hurdles for your customers. More recently, we relaunched our construction loans offering with both prime and near prime options, including full and alternative documentation applications. Loan sizes have been expanded here as well, and you can expect some big changes coming through ongoing. Well, we are here to talk about SMSF. So let's start with how you can capitalize on the boom and the size of that opportunity. As you can see on the screen here, there's a line graph which demonstrates the growing number of SMSFs being established over the past few years in Australia. We can also see that this opportunity is spread amongst the various states. Now we have a pie chart. And in this pie chart, we can see that property makes up 15% of the types of assets held in SMSFs. And this equates today to about 689 million in value, which I'm sure you'll agree is a whopping amount of opportunity. And this only continues to grow year on year. So, how does the SMSF structure work? Let's start with the SMSF itself. The SMSF receives contributions from the member. The SMSF acquires the property, and if they need borrowings, this is where the lender comes in. Now, in order to make this a limited recourse borrowing, this is created with a bare trust. Now, the bare trust holds the title of the property and only transfers ownership back to the SMSF once the loan is repaid in full. Now, a personal guarantee is taken from the member, but the recourse is limited to the property that is held within that trust, which ends up excluding any other assets that that fund might have. Hence the term limited recourse borrowing arrangement, which is often referred to as the LRBA. The diagram here is also available in our SMSF fact sheet, should you wish to use this as a tool for your customer conversations. Let's talk about acceptable purposes at Pepper. Now, we make this available to corporate trustees only, with either an existing complying SMSF or who are in the process of establishing a new SMSF. We'll consider purchase of a property for investment purposes where there is a third-party tenancy, or purchase of a property for owner-occupier purposes, only where the occupier is an associated trading business. And of course, we can also look at refinance solutions. What types of securities will Pepper consider for an SMSF? Well, we have options in that residential space. It must be a single title, either a house, unit, townhouse, or villa. And also options in that commercial space, including mixed residential and commercial securities, offices, industrial, retail, boarding or rooming houses, and multiple units on one title. The super smart features that come with a Pepper loan include up to 30-year loan terms and up to 5 years interest only. We'll consider loan sizes starting at $100,000 all the way up to $3 million. If your security is residential, your LVR is up to 80%. For a commercial security, up to 75%. We do allow redraw for SIS Act compliant purposes, up to twice a year, limited to $50,000 per redraw. Now, this process is controlled. A statutory declaration would be required to be signed before we will consider a redraw. And that declaration includes confirmation that it is for a SIS Act compliant purpose, such as cosmetic, or perhaps there's some repairs to the property, but nothing structural. Now, for you, it's also important to note that we do not claw back for early loan repayment. We also don't have any liquidity test. We do require minimum assets of $150,000 at the time of application. And unique to Pepper, we do have a near prime solution with credit impairment for directors considered. Now, when we talk about serviceability, you may or may not have heard the terms above the line and below the line. Now, if it's the first time you're considering an SMSF loan, this might be new to you. So let's run through serviceability and how this all works. Now, this is the Pepper Money servicing calculator. And as you can see here, first step is to put the name of the SMSF here in the red box, followed by the loan amount, the interest rate, and the loan term. Here you will input the superannuation guarantee. Now, this is the amount that the member receives from PAYG employment under the Employer Superannuation Guarantee Scheme. Now, as of today, that's 11.5%. That will increase to 12% come the 1st of July 2025. Now, we would verify this through the SMSF financials or PAYG income verification, such as payslips or a super statement. Now, this is where you would add rental income. For commercial securities, use net of outgoings, which means after the outgoings have been paid for by the landlord. For residential property, you would enter 100% of the gross residential rental income if it's to be received by the business. The calculator will shade that income by 20%. If you've gone this far in your serviceability calculator and the loan services just using the guaranteed super contributions and the rental income, you will see pass and complete in green. You do not need to go any further. You do not need to complete any below the line assessment of the member's personal position. On the other hand, if you come to this point and it's showing that servicing is not met, that is when you can consider below the line serviceability, which is about additional contributions. If additional income is required and you'll be relying on proposed concessional, existing concessional, or non-concessional contributions, for any of these amounts to be considered, the member's personal financial information must be collected and verified. And the member's income and expense section of the calculator needs to be completed. I'll show you how we calculate this in the next few slides. But before we move through to the below the line servicing, let's take a moment to go through some of that jargon that the ATO have applied to different types of member contributions. So what is concessional versus non-concessional? If a member is salary sacrificing their contribution, they're deemed concessional contributions and are effectively from their pre-tax income. They are taxed in the fund at a rate of 15%. Proposed concessional contributions are the amount that the member intends to pay in addition to their super guarantee. The existing concessional contributions are the amount that the member currently pays in addition to the superannuation guarantee. Concessional contributions, whether proposed or existing, are always capped at $30,000 per member per year. This is not a PEPA rule. This is the threshold set by the ATO, and it applies to all SMSFs. If the member is not claiming a tax deduction for their contributions, they're considered non-concessional contributions, and they would be from their after-tax income or savings. And the threshold for non-concessional contributions is capped at $120,000 per member per year. So here you would put the member status, the number of dependents, and the PAYG or self-employed income. Here, your commitments and living expenses, and then input this into the proposed fields at the top of the calculator if further contributions are needed. And hopefully you get a pass. If not, reach out to your Pepper Money BDM. We'd love to help you with any questions you might have. So let's now move forward to the income verification required should you need that below the line servicing option. So when the borrowing capacity doesn't quite meet the lending requirements, you may consider adding PAYG income verified with a payment summary or tax returns and notices of assessment or a letter of employment or 3 months bank statements showing salary credits, plus the two most recent pay slips within 30 days of application. Where your client is self-employed and they're looking at a full doc application, we would need the ABN to be registered for a minimum of 2 years plus GST registration as appropriate for at least 12 months. And we'd be looking at 2 years of notice of assessment, 2 years of financials, and 2 years of tax returns. We also have an alternative income verification option for self-employed customers, where the applicant can choose to rely on 6 months business bank statements, 6 months BAS, or the Pepper accountant's letter to verify their income. We will consider up to 80% LVR, up to $3 million, and ABNs from 2 years under this alternate verification option. Now, when you're preparing the loan application for your SMSF client, this is the minimum documents that we need for your application. We have our SMSF application form. We do prefer the digital option, but we can accept manual application forms as well. The signed privacy consent form, statement of financial position for each member, the contract of sale, where applicable, an existing loan account statement if this is a refinance, the certified SMSF trust deed plus any variations, as well as the certified bare trust deed, any current lease agreement, 2 years of the audited SMSF financials, or 2 years of the retail or industry super fund statements if it's a newly established SMSF, your serviceability calculator, and proof that you meet the minimum asset requirement of 150,000. Now, last but not least, we also have some smart technology to make applying for a loan super easy. This includes upfront AVMs and EVRs, making that valuation process super quick. We have digital alt doc forms, which means your client and the accountant can complete that verification digitally. We have a digital application submission process, which guarantees a fast SLA. We have digital ID verification, again, making it super easy for your client to complete their ID checks. And last but not least, we have digital loan documents, which will be available from April 2025. Thank you so much for your time today. I hope you got something out of this short SMSF video. If you do have any questions at all, please reach out to your Pepper Money BDM. We're only a phone call or an email away. Thank you.